Did we find the bottom today? Is it time for upside action? Also, why I was banned on our AMC stock. Before I run down the 1 minute chart, I want to spend just a minute and look at the post that got me banned on our AMC stock. Here it is. And maybe it had something to do with the all caps title, I don't know. It's just, I receive a lot of negative attention on Reddit when I post there because I'm not afraid to say when the price is going to go down, and I'm open about when I trade to the downside, and I know Reddit doesn't like that. At any rate, here it is. AMC Technical Analysis, December 13th, 2021. I'm still here because this analysis is still making sense, and I had the balls to put my money where my mouth was. That's all there is to it. And you can see here, sorry this post was removed by the moderators, and I got a message and they said it was per rule 6, which is no self-promotion for influencers, YouTubers, etc. And I thought that was interesting because I'm not an influencer. I mean, I'm on YouTube, I'm journaling my technical analysis on my trades here, and I'm just sharing this on the subreddit, and this is my medium. I'm not self-promoting. I don't ask for likes, I don't ask for subscriptions. Really what I'm looking for is discussion in the comments, and I do my best to be active there. I think that this ban, more than anything, is an attempt to control the narrative. So these comments get kind of petty and there's some bickering back and forth. If you see yourself, this is your shout out, I guess. Alright, now let's start with the 1 minute chart. Yesterday we saw a big decline in the price. It was huge, and Sherlock87, here's your name. Yesterday this didn't make it into the video, but here it is. The price, it fell a bunch, okay great, and then we had this big gap down, and initially in pre-market I was really thinking we were going to see this big nasty fat red candle to confirm this vertical run down, as I was explaining yesterday, showing Thomas Bulkowski's analysis. Nonetheless, we saw a bounce in the morning, and this is totally fine. When the gap filled right about here, I took profits. I said, I am noping out of my puts here. This is where I say it's time just to make money and not hold on to contracts. So that's what I did, and you can see here how that went for me. The December 17th $24 put, I sold 235% gains there. The January 21st $10 puts, I sold 142% gains there. Not bad. And with those profits, I re-entered a couple of new positions. A December 23rd $20 put, I entered at 141, and a January 7th $15 put at 75 cents. And this is actually an average down because I entered into this position a couple of different times throughout the day, and I'll explain why. And I think it's because that we're going to be in another measured move down. Another measured move down. I know there are so many measured move downs. There's one on the daily, there was one on the intraday from last week, and now I think we're seeing another one play out again. Why though? Why? Because this bounce, consolidation, and then the failure to reach out meaningfully above this level would constitute a 70% retracement from the downward move we've seen from the last minor high. Let me pull up what I'm talking about. Okay, so in red I have a few things here. I have a bunch of these little dots, and these circles are the failure attempts to get above this red line at $24.74. This is a 70% retracement from a larger move. And I'll show that on a larger time scale. You're going to see it here in yellow. This height would be the first leg of this measured move down. And we have a high volume spike and bottom right here. And what's super curious to me about this is that it somewhat resembles the larger move we made with a big high end bottom right here. I'm going to pull up a daily scale really quick so you can see what I'm talking about. I'm not a fractal guy, I'm really not, but this does appear to be the same pattern playing out. And here's that high volume tail, right? And you can see the price bounce back up and reach this level, and the 70% retracement of this larger measured move down, which I'm going to draw really quick, all right, from like 45, that 70% level was right about there. And then sure enough, the second leg has started, and there's a miniature measured move down in here, and now I think I see another one here. And while I have the daily chart pulled up, I just want to talk about what I see. Sure, today was a green day, right? Very green day. But what do you see? Lower lows and lower highs. Okay? Yeah, that's a green candle. But let's be really honest. The trend is still down. In fact, I bet you if I turn this on to a different time scale, that'll be a little cleaner to see. Yeah, it's just, that's not even very clean. the trend is obviously still down, even though that candle is green. So I'm thinking it might be something of a bull trap. Today did not constitute a very bullish bounce. It really didn't. We had that big bar and that big volume because of that gap down. That gap down assisted in a little bit of bullish momentum. But then I had a thought. As I'm playing the downside of the market, I'm starting to understand the way that short sellers are playing the market as well. And when the price reaches a significant level, that is when you want to take profits, right? And you can see here, I had a price target of $20.36 from a let's see here. It was a descending broadening formation, and that was yellow, and I've graded out now. This is that formation here. And I came up with this price target, and you can see that this at open, the price just about came to that level, and it was a little closer in pre-market, I believe. So this target was a little loose, which I knew it would be, which is fine. And as soon as the price hit that, we saw that bounce. So it makes sense that shorts are taking profits from this move down, the same way that I took profits on my puts when the price started to bounce. So I guess you could say the professional traders made money closing out their positions between $20 and $22, and amateur traders like myself followed them between the $22 and the $23 range. And now what we probably have some optimistic bulls coming in and buying this, hoping to see a spring upward. But again, that spring upward needs more downside to really form. The vertical run down does have a probability of a full recovery, and that would be the spring that people are waiting for. But to see a green day in the middle of that run is problematic. This retracement is healthy. It gives strength to the shorts. And just as the shorts took profits this morning and probably re-entered positions at that 70% retracement mark, exactly where Bulkowski says shorts should enter, I also entered into my puts. It's really interesting. I don't think we see a recovery yet. I really don't. I'm just going to be openly bearish, and I'm not going to worry about what people think about that. This is my journal. I am just doing this publicly. So if you don't like it, that's not really my problem. I did find it interesting that yesterday's price action essentially formed levels of resistance at every dollar mark, $26, $25, and $24. You can see those in yellow. And that $25 mark proved to be a big point of resistance. So moving ahead, I think that we're due for some more downside action. I do have some puts here. I can lose all of the money on these puts and be totally fine because this is all just turned over profit. And honestly, I am not too upset about getting banned from Reddit. Honestly, I'm not. It's an echo chamber at this point. I have been very active in that community. I really have. And I think it's sad to see the state of things and to see that people are being censored. I am a member of this community. I was here first. I have been here since February. I held through that June run. It's incredible. And then I openly come out as bearish and buying puts, and that's it. That's ridiculous. It's ridiculous, especially if you watch all my videos. I explain. MOAS is totally on the table. All I'm saying is this big dip down is going to have or create more open short interest, and that would mean a bigger short squeeze. And I've talked about how the MOAS could happen and when I think that will occur. I've also been very, very, very blatant about how I oppose the market corruption that we see, how market makers and brokers are making a killing out of this nonsense. And so, just to anyone who doubts where I stand, go watch my videos. Honestly, to be banned like that, to me, just confirms that the subreddit is completely hijacked. The information is being controlled. The narrative is being manicured. And authenticity is not welcome there. If you don't repeat what's being said there, you are not welcome. That's the message I received from that ban. And that is incredibly unhealthy for the movement.